All right, guys, I had somebody ask me about QuantumScape the other day, so I wanted to jump on and make a video and let you know where I'm at with the stock. I'm going to give you the reasons why I'm not investing in it right now and why I am currently staying away from it. I'll also break down the chart and give you an idea of where I see the price headed from here, so let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin, and I am your host. In today's video, we're going to take a look at QuantumScape. Guys, this is a stock that I made a video on months and months and months ago. It is a very speculative stock. They are making solid-state EV batteries, or attempting to. And I had somebody ask me about it the other day, so I wanted to jump on and give you my thoughts because I thought it was a good opportunity to kind of give you an example of stocks that are a little bit ahead of themselves, right? When people invest in stocks that are ahead of the tech, and I think the current market conditions that we are in right now do not permit that type of investing. So I wanted to give you my issues with it and why I am avoiding it. And then I'm also going to break down the chart and go over where I see the price headed from here. Real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Like the video so it gets out there to more people, and come join us at the Patreon if you want all of our trade setups. Day One Squad, I love you. Thank you so much for your support. It really does mean a lot to me. So let's jump in. Couple of things, guys. Like I said just a second ago, QuantumScape is a speculative stock. It was a SPAC. It had a magnificent rally, way back in early 2020 or late 2020, whenever it first IPO'd during the SPAC phase. And it has done nothing but sell off ever since then. Guys, this is a perfect example of investing before the company gets there, before the tech, whatever you want to call it. It is a very hard thing to do, is find companies that are speculative, high risk, that have not obtained a product yet and are making revenue to have a good investment, especially in market conditions like we are seeing now. I mean, guys, they are very far away from even proving themselves. And with the recent developments in Tesla with their batteries, I know that their developments were in lithium batteries. This is solid state batteries. It's just really hard for me to think that the traditional, regular automakers, the big commercial automakers, aren't going to catch up eventually. I think QuantumScape is in a very important time right now. It's almost an inflection point. You've got a very risk off, market right now with the overall conditions. And then you've got a stock that is still very far away from, proving themselves. No revenue, no free cash flow, no net income, and an insane burn rate. So I will go over a couple of those things with you. Guys, they are predicted, or they have analysts expecting them to do revenue this year. They are in a very critical inflection point. In my opinion, this is do or die this year. So if you currently own the stock, you want to be careful. If you don't own it, I'm avoiding it. Real quick, let me go over some of the fundamentals with you, kind of give you the reasons why I'm avoiding it, then we'll jump into the chart. As you can see here, guys, they posted a GAAP EPS of negative 21 cents. This was back at the end of April, which was a miss by 3 cents. I want to say this, though, real quick before we jump into the fundamentals. Guys, this company's exciting, right? Like, they're coming up with some, really cool solid-state batteries. They've got some partnerships, they're working with Volkswagen, they're working with Porsche, but that's hope investing, right? When you start looking at the fundamentals, if we take a look at the income statement, you can see operating income has literally widened in the negative ever since they started 2018. We're clear up to 261.2 million in their trailing 12 months. If you drop down, you look at net income, they had a huge loss in 2020, but they did start to trim that 2021, and they're about 61.2 million in their trailing 12 months. So, a little bit worse than 2021. The point is, though, guys, they're still in the negative. If we jump over and we take a look at the balance sheet, this is one thing that doesn't look horrible. If we look at the total current assets of 1.362 billion versus the total current liabilities, only 28 billion. So guys, their balance sheet is decently healthy. The issue with it is, though, guys, their burn rate is pretty substantial. So their burn rate's going to continue to grow. Their balance sheet's going to continue to dwindle. They are probably going to need to raise cash again in the future. especially if these market conditions persist. You know, when you enter a bear market, you kind of get that rollover and then you get that one, reaction rally to run up, double top, or make a lower high and then dump again. We're kind of at those areas. So I think if we are really going to go back and see pre-COVID levels on the index funds, this thing's going to get decimated. And if it gets decimated, it's going to be hard to raise cash without diluting, stockholders to the absolute T. If we jump down here and we take a look at the outstanding shares, guys, you can see 406 in 2020, 429.8 in 2021, and 430.4 in trailing 12 months. So nothing like horrible in the last year, but nonetheless, they could still dilute more. Last thing, guys, before we jump into the chart is the cash flow statement. Take a look here, guys. Cash from operations has continued to fall further into the negative ever since they started. Their capital expenditures has continued to widen as well. So their free cash flow has continued to look worse. When you take a look, your free cash flow is cash from operations minus capital expenditures. So you're looking at 306 million when it comes to a cash burn in their trailing 12 months. And that could potentially continue to widen. When you look at the earnings estimates, guys, when it comes to positive EPS, they aren't guiding to do positive EPS until 2028. So they likely won't do positive free cash flow till 2028 as well. When it comes to revenue, like I said, guys, here's the inflection point. 2023, they're estimating 1.11 million when it comes to analysts. They've had 0 upward revisions, 2 downward revisions in the last couple of months. So guys, this is a huge time for QuantumScape. If they can't start generating revenue, I think they're going to be in trouble. I think the investors are going to start losing faith. And if the market continues to sell off, you could see this thing sell off to way lower prices. Guys, the way I see it, these stocks right here are very speculative, right? And if you want to find a couple of those assets that you really believe in and you want to put them in your portfolio as a very small percentage, totally fine, right? I've got Lightning E-Motors. I've got, XPeng. Those are kind of my speculative stocks, but they're doing revenue. I mean, they've got vehicles on the road. They're delivering more and more vehicles every month. This company is pretty far off from that. Now, I'm not saying they're not doing anything. I'm not saying they won't make it. Who knows? They may end up being the behemoth of the battery industry, but it's very unlikely. And it's very hard to invest into a company like this when you've got other companies out there, BYD, things like that, that actually are making money, making free cash flow, positive balance sheets, everything. So just keep that in mind, guys. If you currently own it and you believe in it wholeheartedly, sure, average down at lower prices. If you do not own it, I'm completely avoiding it because I would rather wait until they hit that point of inflection and they prove themselves and they start getting there. I would rather let them get there and then pay a little bit of a higher price because everybody's going to say, well, if you wait that long, the price is going to be a lot higher, right? Well, I would rather wait for one of two things. One, they get there, the fundamentals improve, or 2, the chart permits a beautiful setup technically that implies upside. If we jump over and take a look at the chart, guys, that is not the case. You can see here, they have done nothing but make lower highs ever since they peaked out clear back here in December of 2020. So if you really want to look at the chart and be technical, I don't think they've literally ever made a higher low than the previous low because it's really hard to count this face melting rally, right? Okay, sure. You rally, you pull back a little bit, you make a lower or higher low, you rally, you make a higher high, higher low, but that was like straight up. I'm talking like a definitive, rally, multi-week sell-off, rally again to make a higher high and a higher low. It really hasn't done that. It rallied, peaked out, and then dumped, and you had higher or lower high, lower high, lower high, lower high, lower high. And every time it had a lower high, it had a further sell-off, so you made a lower low. Guys, take a look here. You dump, gap down, rally once, twice, 3 times, you dump again. You break the inflection zone, you test it once, 2, 3 times, you break it, back test it as resistance, dump again. The same level that was resistance back here in December. Once you broke that, $40, $37 level, You went back down to test the initial all-time high from September. You tested it again, got back above the 200-day moving average, and you dumped again. And when you dumped again, you broke that inflection zone from the IPO, and you back tested it as resistance while also back testing the 200-day moving average as resistance at the exact same time. So guys, this is not looking good. You have 1, 2, 3 at your initial wick low after the gap up. Then you run back, test it, dump again, find support, try to rally, dump again. Now you are literally flirting with that $10 NAV price and that wick low from clearback in October. So guys, I will give you this. You broke it, you rallied, and now you are back above that $11.25 level. If you use your fibs from, like, let's just say, here to here, you can see, guys, you're at that 1272 right there. So, if you can't hold that 1125 level, 1618 is $7.63, and that's only using this low to this high. If we use, let's just say this low to this high, I mean, you're at almost the 1414, but you're back testing the 1272 as resistance. So guys, you break that $10 NAV price, you're likely going to see $4.30 and maybe even lower. So all I'm saying is, guys, how can you buy a stock that has done nothing but make lower highs and lower lows? Sure, you're starting to get a shortening of thrust, maybe, because you're at a huge level right now. You are losing negative momentum. You did just barely get back out of the bearish control zone. You're starting, you have, class A bullish divergence on your daily RSI. If you jump over to the weekly, you just got in the bearish control zone. You've got bearish convergence and bullish divergence in development on the weekly on the MACD. So guys, it's just, you're throwing something up in the air and hoping that it rallies at this point. What you really need to wait for is you need to wait for that momentum shift. And what you could be working on, and why would you not wait for something like this? You've got your left shoulder, your head, and then you've got a right shoulder if you can get this to play out. So it finds a bottom, it breaks the inflection zone, back tests it, creates the neckline, then creates the head, rallies to test it again to create the right shoulder. And then once you do that and you sell off, then you kind of get confirmation, right? Because then you get that higher low, and then you rally, you break the inflection zone, and then you get the higher high, and then you get hidden bullish divergence on the way out. And now you've got a strategic entry. I would wait until you break the neckline, back test it, because then anytime you get above that 2247, based on history, guys, straight up, straight down, straight up, straight down. So you break 2247, you back test it as support, you could absolutely see $37. However, if you go back to test 2247, you back test it as, resistance for the third time, you're probably going back down to break the $10 NAV price and see that 1618. So just throwing that out there, guys. Let me know what you think down in the comments. This video is obviously for entertainment purposes only. I'm not a licensed stockbroker. I'm staying away from QuantumScape as of right now until we get some clear, concise momentum shifting structures and the chart permits a long or a swing trade. I'm just going to avoid it and keep it on the sidelines and put it on my watch list. If you own it and you want to average down, sure. But why would you not wait for some type of indication that it's going to continue in the right direction? So let me know what you think down in the comments, guys. Come over and join us at the Patreon. I'll see you guys in the next one. Peace.